Good morning, it's Jonathan Barrett with the week ahead report. The current time is 7:42, and we start the week really not knowing how the US is going to go or vote concerning the increase of the debt reduction, the debt ceiling, also the plan. So I'm still a little bit concerned. Obviously, you got a little bit of persuasion there about what is actually happening. That they are coming close to some form of agreement to raising the debt ceiling limit and also putting together package that cuts the deficit but doesn't cut taxes or doesn't increase taxes. So when you look at that, it's quite a tall order. But as you can see with this headline, Reid approves US debt agreement pending approval from the Democrats caucus. So I guess we had a sense of, a small sense of alleviation that they certainly are on the road. Remember also, this is a self-imposed ceiling. So it depends really how you decide to make it, but how investors really decide as to what's happening. Remember, they did have this concern before, back in 1946, and these are some of the reasons as to why they actually put these ceilings in. But it gives the people the opportunity to put a bid and offer in as to the way they see how things should run. It also provides a platform from which they can then launch the 2012 elections. So there's quite a bit riding on the outcome of these negotiations, and as you can see, they're certainly going close to the wire. That might upset the apple cart in terms of the economies, certainly in terms of the equities. The key thing that we have to look at is whether or not what's actually happening how it'll affect the markets. Yes, I think it'll be euphoric to begin with, as people get this sense of relief that they're moving ahead. Does it represent stimulus, though? Or does it represent the fact that we're doing more priming in terms of the market? And they're the key questions that we're going to have to ask ourselves moving on. I think and written in the bulletin that we actually did talk about this. Is in fact the fact that you are raising the ceiling putting yourself into more debt? Are you cutting spending, suggesting that it's not a stimulus package at all? And in fact, if you've been priming the economy for so many years, since 2008, September 2008, is in fact it's going to work as a slowdown. In fact, not only are you taking the intravenous drip out of the economy, but you are actually sapping any form of life that it has. So I think that's the questions which we're only going to have to monitor, watch, keep an eye on. How will it affect the market? I think that's the key. And I guess given that the market is not looking at the economic numbers as such, because remember we did have some positive ones last night purely on this, that I think the markets will get that sigh of relief and perhaps a little bit of a kickback when in fact we see what happens. Keep an eye on the Dow, the futures, the overnight session, for any signs of relief, because obviously it's the key number, the key imponderable, I guess, that we are all focusing on. Okay, in the week ahead report, we obviously talk about up-and-coming events and also some of the economic numbers, which are normal. I did focus a little bit more time on this because it is key to us. So let's see what happens from there. Okay, now let's just have a quick overview, really, of what's happening out there in market land. The Dow down 0.79% on Friday. S&P was down 0.65. Nasdaq was down 0.36. As you can see, red all over Europe. That's obviously red across the board. It continues to be red there. The local market down only 3 points, 4,374. Did take out that bifurcation point that we had, the very important level, 4,430. We will have a look at a few charts on that to see where we actually think it can go. But at the moment, the rule of thumb is obviously a little bit negative, and as it is negative, expect prices to start to trade to the downside. Okay, that's probably about it on that front. Let's quickly look at some of the numbers that we had out on Friday. I guess the Chicago Purchasers Managers Index, not that positive, 58.8%. The previous was 61.1. The consumer sentiment, steady but still on the lower end, not that good as well. And personal consumption in the red, just by a fraction there. So I guess when you look at that, not all that positive in terms of the numbers that came out on Friday. Okay, let's just have a look at the market now. Let's just move that up. I guess the key here is, as we've checked through, let's have a look at some of the commodities. Dollar index is the key, and as you can see, certainly under a lot of pressure over the last couple of days. We did get this relief rally here That was a flight to quality. But it is interesting that towards the close on Friday that the market just got fed up with it and just slammed it. This area key, 73.50, is the key for the dollar. Look, just to have a recheck, have a look at that daily chart there. And whilst it stays down this whole area here, there you go, brings in a little bit more perspective. We're floundering on the downside here. Safe haven for the US, safe haven currency, the dollar, I think still holds value. Okay, let's have a look at a couple of the other. Dollar yen in itself, 77.40, under a lot of pressure. We have a small position on that, and I guess once we get to this level down here, might see some form of a lift. Always be wary of Bank of Japan intervention on that. Okay, but one play could be the fact that they're quite happy to see the yen appreciate, because that obviously lowers their imports, and they need imports at the moment. Local market, Aussie, very steady there, right on its highs as you can see. It hasn't done anything either way, but still retains these highs. It is a safer economy at the moment, whilst China is not in the focus, and as such, it is receiving the benefit. Having a quick look at gold, 1626, marking time. There is stories, and a lot of people actually feel that given where it is, given the concerns out there, gold will remain a safe haven. Something will come of it. You probably get some form of knee-jerk reaction to the downside. Let's just see how that unfolds. But I think if anything here, outside of that trade is 1660. If it reaches that area, then that's where you lighten your load. Just be wary and keep close to it if in fact there's a little bit of a spit. That sort of price action at the top end does suggest there's more in it on the top side. Okay, silver, obviously a bit of correction there, 39.84. Less than gold. Gold's still on highs, this isn't. These sorts of formations still remain relatively bullish, but if you were to buy it, you put your stop in below that 39.20. That's just a very short-term trade. Okay, let's have a look at the SPY. As I mentioned, we took out some pretty important levels, and you can see this more on the daily, where the market is now deciding what's happening. There it is there. That's that area there. We mentioned 44.50, 44. If we can't get back through that in the next 24 hours, then we're visiting back down to here. I think on the cards it looks quite normal that we'll get down to 4,200, but that's still the big picture range for it. Okay. Looking at some of the commodities, crude oil 95.86, a little bit of a high there. And whilst you've got these concerns down to come, there's no real reason to buy it. That can come all the way back down to that 92.80. Copper's been held up artificially on the back of what's happening with the Escondida strike. That certainly caught in about 6% off market in terms of supply. They're already down about 15,000 tonnes of supply to the market. That is expected to grow, so we've got to keep close onto that as to what's happening on that front. Also, we're seeing, obviously with the softs, a little bit of good weather there, but market just moving sideways. Really haven't got too much to say on terms of that, what the grains are doing at the moment, but in my mind still remains quite a concern out there in terms of world ending stocks. Okay, economic calendar this week, let's have a quick look at it. I guess the key thing is what sort of data will move and shake the market. I think, as we know, let's see what the States does. That's probably the most important stuff in terms of the debt. But we've got TD securities in Australia, Eurozone unemployment. They're probably about the major ones that I would think on Monday. Tuesday, house price index, very important. RBA talks, obviously pretty important. Expect no change. There are a few people, given recent CPI data, that suggest that would move higher. I would say no. I would say we're still not seeing interest rates move up here too quickly. Total vehicle domestic sales in the States, personal income and spending are quite important there. Moving on to Wednesday, retail sales in Australia and trade balance, very important. Eurozone retail sales, IDP employment change will be focused on, and factory orders there in the States, another one too, which will be factored on as well. Bank of England monetary policy decision meetings on Thursday, but that's all we've really got there. And as we head into Friday, I guess the key bits of number there are the change in non-farm payrolls, change in unemployment. I would like to see a build. We're all looking for builds. That's what we want to see. The question is whether or not we'll get it. So the focus in itself will be on those numbers as we head towards the week. obviously very crucial to any decision. Okay, that's pretty much about it from me. Obviously, there's quite a lot on the cards. We'll let people know as soon as things happen, as soon as possible. But as you can see, stock market's going to be very tense until we get some clear direction with what is happening there with the debt reduction or the ceiling. So let's stay close to it. If there's anything, feel free to give us a call. The market will be quite volatile. Reduce the size of your positions if you are trading out there, and even take some losses off the table because of this volatility. And it's not until we get up to a real trend can we really start to get back on. So if anything, I'm moving more into cash at the moment. But that's it from me. Have a great week. We'll talk to you later. Bye for now.